Take two. Forgot to turn the mic on for the first take. Anyway, um, yeah, I was planning on doing a tax video this evening, and then earlier today I saw that Son of a Tech did a video. I was like, dang it, beat me to the punch. But then I watched this video and I was like, oh, perfect. I don't need to cover all the things that he covered. So before you watch my video, I have a link to Son of a Tech's video in the video description below. Go watch his video before you watch this video. His is very detailed, and I won't be going over most of the stuff that he went over in the video. So it's a good introduction. So go watch his video. So pause this right now. Pause it. Mean it. Pause it. Go. Okay. So hope you enjoyed his video. So what I plan on going over in this video is a couple of different things. But basically is what are the challenges of doing taxes, whether you're using a tax accountant or a tax attorney or whether you're doing it yourself. So actually to start out, let me give the normal disclaimer. This is not financial advice. I am not a tax attorney. I am not a tax accountant. I'm simply sharing what in my investigations and what worked for me because I do my own taxes. Most people I know don't do their own taxes, but it's just something I've done over the years and I've learned for a long period of time. That's why I do my own taxes. So anyway, so the challenges for doing cryptocurrency taxes and specifically mining are on the income side and the expense side. So I'm going to go over the expense side first. So regarding the expenses, you have two main expenses, power and your equipment. So let's go over power first. It's really the easier of the two. It's the most clear of the two, but you have to do some calculations. So for me, I have smart plugs on all my rigs. So I measure each month how much power each of those rigs uses. I don't have a huge operation, so that works very, very well for me. And then looking at what my rate is, my rate's somewhere between 8 and 9 cents usually. That's the one thing I still have to evaluate. But and then figure out what your rate is, and then multiply it times the amount of power you use for the entire year. And that's how you can identify. And so figuring out how much power you use for the entire year is figure out how much power your rig takes, multiply it times 24 hours, times the number of days in a year, and you're going to get your total amount of kilowatt hours that you've used. And then multiplying that times your rate, standard is 10 cents, mine's 9 cents. So to get your total dollars for power. So that's the first piece of the expense. Then the second piece is your equipment. And it seems like pretty simple. You're like, oh, it's got your GPUs, but it's everything else. And unless you bought it all together, you got to check. I mean, I bought things from AAA Wave, Nerd Gears, Parallel Miner, Micro Center, Newegg, eBay. So you got to make sure you know everywhere that you've bought things from. So checking your credit card statements, going to each of these sites and looking what your order history is. Amazon was another one. Amazon was a lot of odds and ends that I bought from them, whether it be fans or cables or variety of different things. So getting that all together took a considerable amount of time. But as long as you know where to look, it can make things easy. And the other part of it is from Son of a Tech's video, separating it out if you are really big into mining and having a separate credit card that you use only for anything related to your mining operation, that's going to help a lot and make things a lot simpler. I didn't do that, but I was still able to figure out what was used for mining and what wasn't. So basically, that's the expense side of things. Oh, one other thing I wanted to add on the equipment. So there are two different things you can do when you are deducting your equipment. So you can depreciate the equipment, or you can actually deduct the equipment. So as it says in this article, and I've read this a couple of different places, but if unless you have a huge operation, um, if the mining equipment exceeds 1 million in costs, then you may need to depreciate it as opposed to just taking it as an expense the year that you bought the equipment. So I've basically been expensing it based upon the various things that I've read. There's benefits to depreciating it. So I'm not saying that that's necessarily the best way, but doing my own taxes, I keep things pretty much simple. So anyway, so those are the two things to keep in mind. Any way you look at it, these are the types of things you're going to need to give your accountant so that he knows what the expenses are, so that he can then manipulate it to see how it's best input into your taxes in order to give you the least amount of liability. So then there's the income side, and this is really where I found the most challenging because I wasn't sure how to do it. Last year, I had a really small operation. I think I only made a couple $100. Last year, I only had 2 GPUs. It was just starting out with when I say last year, I mean last tax year, 2019. I had just gotten into it in 2019, so I was only in it for 6 months. So at the end of the year, when I realized I wasn't really prepared for taxes, I said, okay, I am just going to cash out of everything and not worry about it and figure it out in 2020 as far as how I'm going to do this going forward, since I didn't have cost basis or anything like that. So I knew that everything was a short-term gain and everything mining was income, but they both get taxed the same since I had a loss anyway because of the equipment that I had purchased in 2019. So anyway, long story short, it worked out just to do it that way in my first year. This year, I knew it was going to be more difficult since I'd been mining all year, been getting more regular payouts, had basically over 500 transactions between mining and trades. So knew things were going to be more difficult. So anyway, so the challenges for income are cost basis, the number of transactions and counting for that, as opposed to like having to do it manually. If you have a lot of transactions, it's not really it doesn't make it very easy when you have a lot of transactions. And then also accounting, how you're going to account for your trades, whether it be last in, first out, or what I use, highest in, first out, to lessen your short-term income from trading. So that way you keep as much of your income in unrealized gains, lessening your tax liability until the day that you decide, I'm just going to sell everything or donate everything or whatever. So anyway, so in order to figure out like how I was going to do this, I started evaluating a number of different pieces of websites, pieces of software, websites that do this for you, and watched a number of different videos and came upon two. One of them was referred by Coinbase, actually, and that was CoinTracker. And I really like this website. If you have a very simple tax situation, this will calculate your cost basis for free. I brought everything in via API calls. And basically, with each of these pieces of software, you set up APIs in your wallets or accounts, allowing somebody to go get it, and then you take that information, you input it into these websites, and that's how they gain access to your wallets or your exchange accounts or whatever. Anyway, so I did that with CoinTracker, and the other one I'm going to show you. So with CoinTracker, like I said, I really liked it. Worked great. Downloaded everything very easily. But for me, the cost was a little bit too high, and it didn't quite fit perfectly like my particular situation or what I was looking for. And so it's very well regarded, but for me, wasn't exactly what I was looking for. The one I ended up going with was Coinly. And this was one that was recommended by a lot of different videos and other things that I watched. So I felt pretty comfortable that this was a reputable site. And so I've done my taxes on it. It's input into my taxes. I haven't completed my taxes, but I've completed this portion of it. And like I said, it really helped out a lot. It identified all of my um, cost basis and did everything highest in, first out, basically keeping my taxes very low for 2020 with regards to my mining operation as well as my capital gains. And actually specifically with the capital gains is where it really helped keep things down. But it was nice because it gives you, here's your income. Now, the one thing I did do on Coinly was you go in and you go through all of your transactions, and it doesn't know what's mining, but you can go in and select all of your mining deposits. So basically, you bring up all of your transactions, and then you say, I only want to look at deposits. So then you look at all your deposits and then classify all the ones that were mining as mining. So that way it makes it easier for you to figure out what actually is a part of your income from mining. So at any rate, so I recommend them. We'll have a link in the video below that should give you $20 off if you decide to use them or use one of their paid services. They do have a free service, but it didn't have nearly the number of transactions and the amount of service that I was looking for. So I went with the $100 account, but I was able to get 20% off, which was slightly less than $20. That which you can get by using my link. Check it out. There's a number of other ones out there. I know another one I had started to look at, but then was like, no, it's not really what I'm looking for. Bear tax. Anyway, check out other people's videos. There's lots of video reviews on cryptocurrency tax preparation services out there. Like I said, you should be able to get a good one for $100 or less, unless you have over 1,000 transactions. Then it might cost you up to $200. So anyway, if you have any questions, please feel free, put them in the comments below. If you like the video, please hit like. And if you want to subscribe to my channel, please do click the subscribe button. Thanks, guys, and have a good one. Bye-bye.